Well, it's early into the new month. That means time for the Corion report. David Bacher of Corion joins us now. David, as always, lovely to have you with us. It's been an interesting month, to say the least. In fact, an interesting start to the new year. Maybe just to kick us off, in summary, what happened in March?
Has indeed, Alec, and thanks for your time again. So in our monthly Corion video, we titled Surprise, Surprise, the Markets Rise. And we thought that title was apt, considering all of the events of the prior month. I mean, it was crazy to think that less than 2 weeks ago, most investors were extremely concerned about the global banking industry, and yet global equity markets rallied when risks seemed to have subsided, and ultimately global equities ended the month up just over 3%. And global bonds also had a wild but ultimately profitable ride. The yield on the US 2-year soared past 5% for the first time since 2007 in early March, and yet it's close to 4% now. So bonds also had a very impressive month of 3.8%, but South African equities unfortunately did not fare well, and they depreciated by just over 2% for the month.
Are you making any changes as a consequence of the pullback in South African stocks?
Yes, we are. If you would recall, at the beginning of this year, we communicated that our clients' assets, we were in an overweight South African equity position based on valuations, and that worked well for our clients the previous year. But, we thought the valuation gap had narrowed, and we moved that back to more of a neutral, balanced exposure. But given what's happened in the last quarter, South African shares underperforming, US in particular doing well in the overseas markets, we've decided to slightly increase that tilt to South African equities once again.
Why is it that South African markets lagged in March relative to the rest of the world?
So, if you actually break down the attribution of which sectors performed well over the last month, and I'm talking on a global scale, you had significant sector swings. Technology shares in the US were up about 9%, while banking shares were down. And if you look at how the markets are actually broken up internationally, in the US you have a much larger component to technology shares, while in South Africa we have the reverse. We have a very small technology sector and a very, very large financial services sector. So, obviously the economic growth and the Eskom issues are still very much headwinds. But if you actually look up at the breakdown of our index versus most developed market index, you can actually see why we actually did a lot worse in overseas markets.
So it's all about the indices. Let's go through the detail, and that now on our screen we can see exactly what you said a little bit earlier. That in the 1 month picture, we've had a South African equities under a little bit of pressure there, especially financials. I suppose that's not surprising given what happened with Silicon Valley Bank and Credit Suisse.
Correct, and that's a theme that went across the world. Banks under pressure. Obviously interest rates also has a factor on banks, but by and large, there was a lot of uncertainty following, not just one banking calamity in the US, but also contagion in Europe. And that affected all banking shares probably globally. And that was certainly the place that if you were overweight, you would have been having a little bit of a tougher period.
Moving on to the big picture for March, which we can see there. You mentioned bonds had improved, but when we get into the individual stocks there, an incredible performance by the gold shares here in South Africa, Goldfields Limited and Anglo Gold. What's behind that?
Well, when you have a banking uncertainty and risk increases, you generally have a rising gold price. Gold in US dollars performed very well. I think it was up over 8% for the month. Obviously, those gold companies thrive in that kind of environment. So certainly there was enough catalyst, and those companies having quite a lot of leverage to the gold price. and that explains their very good performance.
On the other hand, not surprising to see Investec, because it is an international bank with a big operation in the UK, falling along with other banking shares. But Woolworths and MultiChoice, I suppose each of these, you have to go into the detail to understand why.
Correct. I think if my memory serves me correct, MultiChoice did have quite a big run the previous month on the back of a corporate announcement. So it's not something I've been following very closely, but I think maybe it just gave back a bit of those gains. And then Woolworths, I think it was just their specific issues in South Africa, the economy, etc., rising interest rates. That's certainly not a great environment for those kind of shares, but retail shares in general also, Mr. Price, Truist, I think also came under a bit of pressure. So a bit of an industry facing a bit tougher times due to the economic backdrop.
And when you go above that, you see the telecommunications down by 10, not surprising, because MTN was under pressure, down 12, and then financials, which was a bad month generally for financials. But I like this one, and why I'm going to look at this, and I'd like you just to talk us through here, is Fairtree. They seem to be coming more and more to the fore here again in the year to end March, best performing South African equity fund. And it's not just slightly ahead. It's a significant, almost 3 percentage points that the Fairtree Prescient Fund is ahead of the next best fund, PSG Equity. What's going on there? How come they are managing to now consistently get at the top of the tree?
Hats off to them. They've had an unbelievable period. They're probably the fastest growing asset manager in South Africa. If I had a look at the last 5 to 10 years, I think their assets have grown to, north of 80 billion rand now. From a very small boutique manager. And that's on the back of some good investment returns. And I think where they've been particularly strong is actually getting their sector allocation right. In South Africa, where you have a market that is, got resources and financials, and they tend to do well at different times, your ability to rotate between those two sectors, if you get that right, that's a massive boost to performance. And they've generally, more often than not, got that sector rotation right.
And there you see Live by the Sword, Die by the Sword, Piet Viljoen's SCI Value Fund. It's now called Merchant West, down 7% year on year. So he wins an award and then, falls off a cliff.
Well, I must just, what we like about our Corion report, that it, it's quite succinct and to the point. But for us, having a report like this doesn't reflect the longer term time periods, and investing from a Corion perspective very much is a long term investment outcome where you should be measured, not the short term. And last 2 years, Pitt's performance has been very, very good. He caught the mid and small caps to perfection. What has been driving returns of late has been the larger caps, not really where he has an overweight position or he historically has. So you are going to get periods like this. I wouldn't be too concerned about a period shorter than even 3 years if you believe in that manager and if you believe in his ability to pick shares over the longer term, which from our side I think Pitt does really, really well.
Equity funds, global equity funds rather. This is quite a nice table that you put together. There again, nice to see Discovery coming through very strongly. But I guess if you were invested in the best of the global equity funds, it has been a pretty good year.
Correct. This quarter in particular has been certainly much better than 2022 and very much needed. I think the returns of these global equity funds really always dictate what the underlying sectors have done. So there's quite a lot of thematic funds in the top 5, themes such as technology, industrial revolution. Whenever those sectors do well, and the NASDAQ had one of its best quarters, I think, since 2020, it was up over 20%, you will see those funds come to the fore. So just a little warning to investors out there, not, be guarded against following previous winners, especially over the short term, especially thematic funds that have had a good time of late. Generally, has high risk, high exposure to certain sectors and themes, which comes with high risk, and sometimes that often when you've had a good period, what follows is more mean reversion.
Isn't that just so appropriately mentioned? Because if you have a look at this table, best performing over 1 year, number 1 and number 2 are in position number 2 and 3 in worst performing for the past month. So you if you chased them and gone into them in the beginning of March, you'd be feeling a little sorry for yourself now. But that isn't what investing's about. I love this table that you put it together on the inflows into the South African equity funds. And it's interesting to see in the past year, there's still a lot of money going into Satrix. 361 best in the past, or biggest inflows in the past month, and very strong inflows, over R1 billion for that BCI SA equity fund. Cy Jacobs and co are getting their fans, aren't they?
They certainly are. I think what's even more impressive, and when you're reporting as we do on inflows, you're always going to put in the back of your mind, how big is that asset manager? So, for example, not to pick on Allan Gray or Coronation, they are big houses, and if they have an outflow of R1 billion, sounds like a hell of a lot of money, but in the context of their size, it's less damaging or less meaningful relative to other managers. And 361 is much smaller than those asset houses, and to be on the top of the ranking in terms of inflows shows you how well they are actually doing. I think they've got a nice, they almost, in my opinion, probably a Goldilocks manager. They're not too big, they're not too small. They've like a sweet spot where they can do appropriate research, investing, etc., but also be able to move and be active in the somewhat constrained South African market.
I need to talk to Walter Aylett again sometime. I see his company is doing really well. Aylett Balance Prescient, performing well and getting a lot of new mandates, clearly.
Correct. I mean, Walter, I would imagine, was at Coronation 25 years ago, went on his own for over 2 decades, plying his trade consistently and reaping the rewards.
And who's not? Those who are losing funds. Now, this was, I had to put this up because to see Fairtree being the best performer in an earlier table, and then the biggest outflow.
Okay.
How do you put the two
together?
Very
good question. And I have to say that reflects badly on Fairtree. And the actual reason, because we did notice that, and we did actually engage with them on this issue. This is the inflows and outflows in their collective investment scheme. So once again, the beauty of the Corion report, it's there to give you a guide, but it's also there to maybe probe you to ask more questions. And that's what we did when we see that number. And what actually happened there, they had a large investor that wanted to move out of the collective investment schemes and have a different segregated mandate. So in fact, the business was net neutral. But this is a report on collective investment schemes. So sometimes you got to take the data and just ask a few more questions. And, we thought about, should we make an exception to this report? But then, you've got to be consistent on how you provide data, and the rules are the rules. And that's actually what happened with Fairtree.
It is interesting, though, generally speaking, and I'll just go back to the who's hot graph, and you look at those names, a lot of them are smaller asset management firms, PPS, PSG Equity. We mentioned Walter Aylett. PSG's done real well, hasn't it? And then, of course, we did Cy Jacobs and 361. And then you look at the next one, those who are not, and the names there are pretty much the big guys. Coronation, Allan Gray, Old Mutual, ABSA, Stanlib. Is there a trend, or is this just a shot, a snapshot in time?
So I think if you look at the outflows in the industry, I think you've got to take into account the size of these asset management houses. So if they're losing assets, as a percentage of their book, it's not as alarming as you might think. But looking at who's getting flows, I think that is an attractive, healthy picture for the South African investment market. Having boutique, smaller managers, gaining assets, giving the South African investor base, Corion, more options to invest, different skills. a concentrated market that we have in South Africa is not healthy. You want competition. You want more people to offer different products, and that's what we're getting after what I think has been a very long period of just a few asset managers dominating the South African landscape.
Nothing wrong with a bit of competition and certainly choice. Any interesting developments that we haven't covered thus far in the past month in the money management world?
I think what was the standout news for the month was the hedge fund news. The South African hedge fund industry has done really, really well for a sustained period. But there has been some regulatory headwinds. And what the regulator announced this month is that hedge funds would be allowed in certain collective investment schemes. That is a significant change in regulation. At Corion, we've been managing hedge funds for over 2 decades. The performance across the industry has been good, and I think it's a very useful tool for investors to shield their portfolios not just from being equities or bonds, and have once again more options. So we like where the industry is going, and we think that was definitely the standout news of the month.
And it is something that not everybody appreciates, but often you would like to put your money somewhere where it's going to be protected. Yes, you'd like the upside, but hedge. You want to hedge it against losing money. And in an uncertain time like we have at the moment, many people are thinking that way. So for hedge funds now to be classified on a wider ambit, or more people can actually invest in them, it makes a lot more sense than the traditional approach of putting your money in a unit trust or in a long only fund, or a fund that you only make money when it goes up, and just hoping for the best and riding out all the bumps.
Correct. The more tools you have, certainly I believe, for diversifications, what you want from an ideal portfolio is to get to your end investment outcome with the least volatility, and having more options than just equities and bonds, and have a strategy that can protect you in downturns and do different things at different times, certainly will aid you in getting that outcome.
David, you are aware of our local versus offshore challenge, million rand challenge between Piet Viljoen and Magnus Haystack. And Piet was just screaming ahead in the initial stages. Magnus lagging badly. He complains because he says it was the worst time possible, November last year, to go into November 2021, to go into the international markets. But given that Piet's value fund is now down 7% in the past year, and we know that the rand is weakened, and we know that international markets have been a little bit more, I presume that gap, you aren't monitoring it, you aren't keeping the tally, but I presume that gap would have narrowed.
Definitely would have narrowed. And I think you asked me this question when the competition started, and I said, Piet's views best reflect Corion's views at the moment. So we were firmly in Piet's camp. And I think we remain in Piet's camp, especially what's happened over the last 3 months. Valuations have, in South Africa, in our opinion, remaining relatively attractive. And I also think you got the currency element there. South Africa, relative to the US dollar, the currency has already gone out quite a lot. So you almost have, in our view, 2 ways to win. You have what we think is a cheaper market on a valuation perspective, and you also have a cheap currency on a valuation perspective. So we're still in the Piet's camp, but let's see how things unfold.
David Bacher from Corion Capital, talking as always once a month, early in the month, on what happened in the money markets, investment markets in the past 4 weeks. And I'm Alec Hogg from BizNews.com.